Ever feel like you're getting mixed signals in the market? One minute it's green lights, the next feels like you're hitting a brick wall. That kind of conflicting data. That's really the story with AT&T right now, and is what we want to untangle here. Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks.
Exactly. So our mission today is a deep dive into AT&T ticker T. We're digging into our research captured this morning, October 20th, 2025, around 7:08 a.m. Eastern, to try and see past the headlines, figure out where this stock might actually be headed.
Okay, let's set the scene a bit. The macro backdrop, we've got, a modest pre-market lift today, S&P, NASDAQ ticking up slightly, nice to see. But the broader economy, it's definitely showing some fatigue. People are talking about 30, maybe 40% chance of recession. How does that backdrop affect a stock like AT&T?
Well, it's interesting. It kind of creates this fascinating safety net, you could say. Because while the market broadly fears a recession, these utility-like companies, things people need regardless, they become sort of protective shelters. So that macro caution, it actually helps set a bit of a floor for $2. But, and this is a big but, the company's internal fundamentals, honestly, they're a bit of a mess right now.
Okay, a mess. Tell me about that internal tug-of-war then. What's actually good news? Something tangible.
Yeah, there are tangible wins. They are rolling out 5G, across major infrastructure, like the NYC subway system. That's real operational progress happening. And maybe more importantly, we just saw a huge institutional vote of confidence. The Virginia retirement systems, they scooped up over $80 million worth of the stock, a major buy.
80 million, wow.
Yeah. That signals, smart patient money sees real value there, deep value.
Okay, that institutional buy is definitely a strong signal. But You mentioned a mess, so the bad stuff. We can't ignore that $13 million FCC settlement for the data breach probe. And let's be real, raising home internet prices by $5 a month right now. Probably not winning them any fans.
That's true. Definitely not great PR. But let's add some context, right? For a company AT&T size, a $13 million fine. It's more headline risk than, say, a solvency risk. The customer issues are maybe more concerning long-term, but even those kind of pale when you look at the valuation paradox.
Valuation paradox, what do you mean?
Well, the stock's trading around, $26.34 currently? But the fair value models, they consistently put its intrinsic worth much higher, closer to $32, maybe even $34. Wait,
$32 to $34? So the market thinks it's worth, 20% less than many analysts do. Why such a discount if, 63% of analysts rate it a buy or strong buy?
That gap. That's often where market sentiment comes in. And this is where things get really interesting, aggressive even. Despite those messy fundamentals we talked about, despite the valuation lag, the options market, it is overwhelmingly bullish right now.
Okay, how overwhelming? Give us the number.
The put-to-call ratio, it's just 0.25.
0.25.
Yeah. So put that in plain English.
Yeah.
For every single person betting against the stock in the options market, you've got 4 people betting it goes up. That shows some really aggressive near-term conviction that the price has to rise.
Okay, 4-to-1 bullish bets. So if the short-term traders are that confident, what about the bears, the longer-term doubters?
They're basically nowhere to be found right now. Short interest is incredibly low, just over 1%.
Just 1%.
Yep. The smart money, the big players, they are simply refusing to bet against this stock at these levels. It's pretty rare to see sentiment quite this one-sided. It suggests traders likely believe that generous dividend yield acts as a pretty solid floor, protecting the downside almost regardless of these operational hiccups.
All right, makes sense. So let's pivot to the technicals. The chart itself. Off in the reality check, right? You said it tumbled recently, and now it's just kind of stuck in the mud around $26.30.
Exactly. And this is where that tension really comes to a head. The long-term technical trend, clearly broken. That's a major headwind. Any bounce has to fight that. However, the downside momentum, it's absolutely fading. It's like the engine sputtered out. Selling volume is low, the pressure is off for now, and volatility is minimal.
Low volatility, you mentioned that. What does that usually signal, near term?
It usually means the stock is coiling, like a compressed spring, right? Getting ready for a decisive move, could be up or down. The selling seems exhausted. You have this powerful, almost roaring bullish sentiment running smack into this, well, technically damaged chart that's trying to stabilize.
Okay, so putting it all together, defensive macro picture, strong institutional buying, overwhelming bullish sentiment in options, butting up against a technically weak, though stabilizing chart. What's the final verdict from our research?
We land on cautiously bullish for the next few sessions. The sentiment feels strong enough to at least attempt reclaiming some of those recent losses. The key battleground, the level the bulls absolutely must win back, is $26.50. If they can close above that, you might see momentum kick in.
And the downside risk, the level where things look bad again.
The key invalidation level, think of it as the trapdoor, would be a close below $25. If the bears push it below that and keep it there, well, then they're likely back in control.
Fascinating stuff. So that core tension, you've got big money seeing value way up at $34, options traders betting heavily on a rise. Even though the chart technically looks pretty busted, why do these traders believe what they believe despite that clear chart damage? That's maybe something for you, the listener, to chew on this week as you watch the price action unfold. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.